gentlemen, good day and welcome to Muthoot Finance Q2FY26 earnings conference call hosted by Elara Securities. As a reminder, all participant line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Shweta Daptardar from Elara Securities. Thank you and over to you, ma'am.
Thank you, Shifa. Good evening, everyone. On behalf of Elara Securities, we welcome you all to Q2FY26 earnings conference call of Muthoot Finance Limited. From the esteemed management, we have with us today Mr. George Alexander Muthoot, Managing Director, Mr. Alexander George, Whole-Time Director, Mr. George Alexander, Whole-Time Director, Mr. George M. George, Whole-Time Director, Mr. George Muthoot Jacob, Whole-Time Director, Mr. Yapan Alexander, Executive Director, Mr. K.R. Bijimon, Executive Director, Mr. Oomen K. Memin, Chief Financial Officer. We express our gratitude towards the esteemed management of Muthoot Finance to provide us the opportunity today to host this conference call. Without further ado, I now hand over the call to Mr. George Alexander Muthoot, Managing Director, for his opening remarks, post which we can open the floor for Q&A. Thank you, and over to you, sir.
Good evening to all of you. This is George Alexander Muthoot, Managing Director. We have the members of the board also with me because today afternoon we had our board meeting for reviewing the Q2 performance of the company. And I'm glad to say that Muthoot Finance consolidated loan assets under management grew 42% year-on-year to 1,47,673 crores and as against 1,04,149 in the corresponding half year of last year. During the half year, consolidated loan assets under management grew by 25,000 crores, a growth of 21%. Consolidated profit after tax stood at 4,386 crores as against 2,517 crores last year, an increase of 74% year-on-year. Muthoot Finance, the portfolio in Muthoot Finance per se, the standalone profit of Muthoot Finance stood at 4,391 crores in the half year as against 2,330 in the last financial half year, an increase of 88%. The profit after tax for the Q2 financial year stood at 2,345 crores as against 1,251 crores in the Q2 of the last year, an increase of 87% year-on-year. Loan assets under management stood at 1,32,305 crores this half year as compared to 90,197 in the preceding half year of last year, again registering a growth of 47% year-on-year. During this quarter, during quarter 2, financial year 26, gold loan AUM increased by 11,723 crores, registering a growth of 10%. Now coming to the subsidiaries, Muthoot Home Finance, the AUM stood at 3,247 crores. A total revenue for the half year stood at 222 crores as against 155 crores in the last year, a growth of 44%. Profit after tax stood at 10 crores. Stage 3 loan assets stood at 1.69% as of September 30, 2025. Wellstar Microfinance is a subsidiary again of Muthoot Finance, where Muthoot Finance holds 66% stake. Loan AUM for the half year stood at 7,717 crores and the total revenue stood at 840 crores. It incurred a loss of 160 crores during the half year, which is consistent with the adverse environment generally in the microfinance sector. However, the losses have narrowed down from 128 crores in Q1 to 32 crores in the Q2. Stage 3 loans stood at 4.58 crores, which is also consistent with industry peers. Consequent to the RBI allowing microfinance companies to have 40% non-microfinance loan portfolio, Belstar has opened 23 gold loan branches in the half year to diversify the loan product portfolio. Muthoot Insurance Brokers, an IRDA registered company, has a revenue of 70 crores and it has achieved a profit after tax of 23 crores in this half year. Asia Asset Finance, a listed subsidiary based in Sri Lanka, where Muthoot Finance holds 72.9% of the stake, the loan portfolio stood at Sri Lankan rupees 3,868 crores as against 2,600 crores in the last half year. Again, an increase of 48% year on year. The total revenue also stood at 440 crores and the profit, an increase of 40%, and the profit after tax of Sri Lankan rupees 40 crores as against a profit of 30 crores last year. Muthoot Money Limited, a wholly owned subsidiary of Muthoot Finance, is an RBI registered non-banking finance company. Today, it extends loan against vehicle finance as also loan against gold loans. The loan portfolio for the half year stood at 6,393 as against 2,491 crores, an increase of 63%. The total revenue increased to 501 crores as against 146 crores in the half year, an increase of 244% year on year. Again, it achieved a profit after tax of 106 crores in this half year compared to 5 crores in the previous year. We are delighted to report another strong quarter with standalone loan assets under management rising to 1,32,000 crores. The steady trajectory highlights the resilience of our business model and the continued trust of our customers. Standalone profit after tax also increased 88% year on year to 4,391 crores for this half year. In view of this performance, we are upgrading our financial year 26 gold loan growth guidance from 50% to 30 to 35%. Favorable regulatory changes in the RBI for gold loan sector, higher gold price, and tighter norms for unsecured credit are expected to boost gold loan demand. We will continue to expand our non-gold loan portfolio also, including personal loan, which today including microfinance. This non-gold loan portfolio is about 12 to 15% of the consolidated loan bond portfolio. The microfinance sector is showing renewed resilience following the implementation of regulatory guardrails and improved underwriting, auguring well for future performance. We are accelerating our digital transformation to deliver faster, more seamless credit access for millions of customers worldwide. With an enhanced branch network, a trusted brand, and sustained investment in technology and innovation, Muthoot Finance is well positioned to deliver sustained growth throughout the financial year 26 and beyond. I think with this, I would like to conclude my short address. I would be delighted to give clarifications from any of the investors. Thank you.
Thank you so much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. first question is from the line of Maruk from Novama. Please go ahead.
Yeah, Maruk, we are not able to hear you.
As there is no response from Mr. Maruk, we will proceed with the next question from Mr. Raghav from Ambit Capital. Please go ahead.
Sir, hi. Good evening and congrats on these results. I just have one question. I wanted some understanding on your yield. So it has moved up again in this quarter versus Q1. Last quarter, I remember you had some 350 to 400 crores of recovery benefit. What is that recovery benefit in this quarter that is leading to a yield expansion again quarter on quarter? Is it somewhere around 550 to 600 crores in this quarter? Is that estimate right? Just wanted some thoughts on this. And then I have another question.
So Raghav, I think the reason why it has increased a bit probably in the NPA bucket there has been a liquidation of some old dues, especially in the light of increased gold price. So there we have been able to generate a better yield, which should somewhere around 300 crore plus. So that should add to the additional yield interest income which has been generated. As you know, on NPA accounts we do not recognize the interest. So that has come in as an additional yield. Rest is probably because of the churn in the book.
Okay, and you also, I think last quarter you had mentioned there was some 150 crores that you were to receive from the ARC sale. Has that come in this quarter?
No. So, the collections from remaining portion of ARCs, this quarter it is small.
Very small.
Very small.
Okay, understood. So you're saying the entire yield expansion that has come, which is from 19.56 to 19.99, that's entirely because of this 300 crores. Is that understanding right?
Yeah.
Because the math doesn't seem to be adding up. The math doesn't seem to add up only about 300 crores because I think last quarter when you had this 350, 400 crores, adjusted for that, the core yields were somewhere around 18.5%. And hence the question that if this benefit is only restricted to 300 crores or is it more?
So roughly around 300 crores. And the yield should be somewhere between 18.5 to 18.75, somewhere around that range.
Understood. Perfect. That was all from my side. Thanks for answering that. Thank you.
Yeah.
Thank you. Next question is from Piran from CLSA. Please go ahead.
Yeah, hi sir and team Muthoot. Many congratulations on the strong quarter. Just going back to Raghav's question on the yield movement. So if I reduce 350 crores from last quarter and this quarter's interest income, that interest income has still grown 14% versus loan growth of 10%. So are our fresh disbursement yields going up, in the last few months?
No, it is not.
The interest income is going up, because the portfolio also has gone up, no?
The fresh loans
portfolio is up 10%, interest income is up 14%, 1/4. If I adjust for the 300 crores.
Okay. So the non-portfolio, so we have a bouquet of products for yield, etc. So high yield, low yield. It sometimes happens that in some quarters, the higher yield portfolio, the offtake may be higher. That's simple that. It's just not that such a lot of retail loans. Some of it happens like that. So it only means that during the quarter or just before the last quarter, more high-yielding loans would have been disbursed. That's it.
Okay, so we should not read too much into it. It sounds like that.
Yeah. Exactly.
Okay,
that's what I think. That's what Uman was also trying to say.
Okay, now I understand. Sir, and also in your opening remarks, you mentioned about favorable regulatory tailwinds. I think you're referring to the LTV, you can give at a higher LTV for lower ticket loans. Have we started doing that for loans less than 2.5 lakhs?
What I meant by regulatory tailwinds is mainly the clarifications the clarifications and the confusions being set at rest by the RBI. I think that is what I meant by the regulatory tailwind. Of course, we have not started the new less than 2.5 lakh loans and 85%, etc. We have not started, sir.
But we intend to start before April 1st? Or you just wait for the market to do and then we follow?
We'll take some decisions. I think usually we do and others follow.
Okay, fair enough. No, good one. And so just lastly on cost of funds, how much more benefit can we expect to see over the next 2-3 quarters?
I think it has started. Cost of funds, cost of borrowings has started declining. I think last quarter it was 8.99. This quarter I think it is 8.78.
Yeah.
Last time 8.88. Now it is 8.78. Yeah. So I think it should come down. I think banks MCLR also started declining, so we should see that. Domestic NCD market also the rates have started falling. So I think we should see the peak level of interest has already reached, and I think it started declining. So we should get a benefit in the coming quarters.
So 30-40 bips sounds reasonable? Like 8.78 becoming 8.3?
We are also growing. Yeah, probably by the end of the year. Not end of the year, it's another 2 quarters. We should see some decline. I'm not, maybe another 15-20 basis point decline should happen from first quarter of next year.
Okay. So that answers my questions. I'll get back in the queue, and congrats once again.
Thank you.
Thank you. Next question is from Maruk from Novama. Please go ahead.
Yeah, hello, congratulations. I have 2 questions. One is on yield. So, do you have any plans to cut your yields, given that, competition is at very varying levels of yield, right? There are gold finance companies such as you, which are at 18 to 20%. And then there are SFBs and other NBFCs at around 15, and then, banks are lending at lower. Maybe they are all different segments. But are there competitive pressures enough to suggest a yield drop, or it'll just track the interest rate cuts?
So, Maruk, see, our lowest interest rate will be around 10%. Our highest rate will be around 21%. We keep, tweaking with these schemes, depending upon how the business scenario is. So that's why sometimes the rates go up, sometimes rates comes up. But we generally try to, remain somewhere around 18.5 kind of a level, because we try to cater to different segments, depending upon how the market is. So, to answer your questions, we have a low rate products. We have not done any across-the-board reduction in interest rates.
So, and competition from all the banks and NBFCs which you mentioned, they are there for the last several years. So there's nothing new. Banks are there, SFBs are there, NBFCs are there, nothing new. So we try to give the best for the customer and probably see that we grow a portfolio also side by side. If the rate is too high, etc., people may not come. If it is too low, or yield may come down. So we do a balance.
Okay, sir. Thank you. Thanks a lot.
Thank you. Next question is from Abhijit from Motilal Oswal. Please go ahead.
Yeah, thank you for taking my question, sir. While you have already answered, right, that competitive intensity has remained for the last many years, and despite that, they've done so well. I'm just trying to understand, especially in southern India, right, where we kind of keep hearing that there are other NBFCs, right, who have entered into gold loans and who poached employees from Muthoot, right? So I'm just trying to understand, despite so many NBFCs now announcing their foray into gold loans and now starting to build teams in gold loans, it still is not really prompting you to rethink your strategy anywhere, right?
So, thank you. I think there is competition always. This is not the first time. Others are also planning to enter. There was again, I remember in 2011-12, there was again a rush of all NBFCs and non-NBFCs also wanting to enter the gold loan sector. After some time, after a year or two, most of them lost interest. So at this point of time, there are people coming in, but focused players, people who are focused. We were also focused at that time. We are focused today also. We are focused on gold loans. I think there is always space for us, and we did not take any knee-jerk reactions when such things, some people come. There's no need for any knee-jerk reactions. We are there. We have our branches. We have our customers, and those customers definitely value the service and the products which we give. I think, to answer your point, don't need to take any knee-jerk reactions to some people saying that we are, and people poaching from Muthoot always has been there. But anyway, people think that by poaching a few managers or some senior managers from Muthoot, they can start a gold loan. But they will start, but afterwards they'll find it, the operations, the challenges in the operations will catch up with them. So we'll wait and see. So in one word, there's no need to take any hasty or knee-jerk reactions. People will come and go, but we have been there focused on this.
Got it, sir. And so there is then a related question again saying on the same thing, that even despite so many other large NBFCs entering into gold loans, no one is at this point in time introducing any teaser rate schemes, right? Just to kind of entice customers, right? So I mean, given how yields have been, right? What I'm trying to understand is the pricing discipline in gold loans is still very much there, right? Everyone is able to grow without really having to do too much on yields and pricing.
I think you put the question, you answer it also. So I think I should agree with that.
All right, sir. And then the last question again I had is, sir, I mean, while you explained that there were some one-offs in interest income in the first quarter, second quarter, right? And which is why maybe the yields are higher. But from a second half perspective, if you could help us understand what are the recoveries which are expected, either from NPA resolutions or from the ARC transaction that we in the first quarter called out that maybe another 100 or 150 crores we are expecting. So what are the recoveries which are expected, which will reflect in interest income in the second half? And then what are the blended steady state yields we should expect going forward?
I think yield is what woman also mentioned, 18.5. 18.5, that is the rate which we would plus or minus 0.5% is what we would be expecting. Maybe 18.5. That should be the steady state. Occasionally some of these comes because, as woman said, when there is a churn in the NPA, the older NPAs with a lot of interest embedded in them gets replaced by a new NPA with much lesser interest. So all the interest which we had actually de-recognized will become recognized. So when this churn happens, some of these things happen. So our NPA as of this quarter is, I think, little less than 3,000 crores. And I think it has continued to be there. That is because we give more time to the customers to take the loan. That is the NPA. Regarding the ARC, yes, some of it people have come and taken back their gold, and now the gold price is also high, so probably more and more people may come and take back their gold. In fact, in the ARC also, all the customers who are able to take back the gold are very, very happy because we did not auction their gold. So again, there are some little ARCs left, and we are definitely in the money. So we are not hard pressed to auction it quickly, and when they come, they'll be able to take it back. So answering the question, the yield should be in the 18.5 range going forward also. This, of course, occasionally this churn in the NPA, etc. happens, and some extra interest coming.
Got it. And sir, if you could just answer that question, what are the expected recoveries in the second half?
Expected recoveries means what is, there's no particular customer whom we should recover. It's just such a lot of small loan portfolios. So it is just the people coming and taking back their gold. There is no one big customer or some big loans which has to be recovered. There is nothing like that in this. In the gold loan, it's all average. 1 lakh is 50,000 and 1 lakh loans. They come, they close and they go. That's all.
Got it, sir. This is useful, and thank you so much for patiently answering all my questions, and I wish you and your team the very best.
Thank you. Next question is from Love Sharma from JP Morgan. Please go ahead.
Yeah, hi. Thank you, management, for taking the question. 3 questions from me, if you can help me with those. So first one, I think on the ECB side, on the dollar bond borrowings, of course, they have grown to quite decent portion of the overall funding, about 15% now. If you could just share some insight to where do you think your target or any steady state number you have in mind as a percentage of your funding for the ECB borrowings. Second question would be around the new RBI guidelines. If you can share what has been the changes since they have been implemented in October. And I believe some of those measures would likely be implemented from April onwards. But just to get a sense of what you expect in terms of changes, in terms of growth, competitive scenario, or anything else which you could highlight. And just lastly, I think you made some announcement around this particular case about some retail investors having some complaints or some issues. If you could just share where that case is or what is the any quantifiable impact you could see there, if at all. That's it from me. Thank you.
ECB borrowings is around 16%. Ideally, we should have a stable source of funding. If it is a stable source of funding, it should constitute around 25-30%. But on ECB borrowings now we have focused only so far on bonds. There is also a larger ECB loan market which probably we will be keen to look at it.
Regulatory changes. Regulatory actually it's all clarifications. There is not much changes happening, and we have not started implementing the new regulations which is kicking in only from 1st of April next year. So I think there is nothing now to be done on that. So we have not made any changes. There is no big changes necessitated from this regulatory guidelines. The only thing which is there is the new loans which we are permitted to do loans up to 2,50,000 with 85% CV, etc. That we will consider from next April. The board will have to take a decision, or the credit department will take a decision on that. Regarding the
last point, I think we have already filed an exchange filing, which is quite detailed, so we don't have anything to add more than that.
Is it possible to give any quantifiable amount? How much of the retail investors are asked, what kind of losses they incur, etc.? Any just from their perspective. Please go through that exchange filing. This has nothing to do with Muthoot Finance or the loss incurred by the investors. Okay. Thank you. Yep.
Thank you. Next question is from Shreya from Nomura. Please go ahead.
Yes, thank you for the opportunity. Congratulations on a great set of numbers. I have 2 questions. I wanted to understand our average ticket size is now more than 1,17,000. I wanted to understand at what point or at what ticket size will this start plateauing, because obviously at the higher end your bank competition from banks will become aggressive at maybe beyond 2 lakhs or 2.5 lakhs or 1.5 lakh. If you can help us understand beyond what ticket size where do you feel for your book you see far higher competition from the banks. My second question is on the number of customers. Obviously, there was a very strong growth in the number of customers in the slide that you've given of customers coming back with fresh collateral, etc. But in this quarter, that number seems to have plateaued a little bit or declined in certain segments. It seems a little counterintuitive because we thought that a lot of customers who are not getting MSME loans, not getting MFI loans would still be coming to you all. Has there been some slowdown in the number of people walking into your branches? Those are my 2 questions. Thank you.
Okay. Regarding the competition from banks, what the average ticket size, etc., there is space and room for everybody today. As you said in the last line, more and more people are now thinking of gold loan. More and more people are now comfortable to take a gold loan with their jewelry. So we don't see competition that somebody is taking away our customers, or we are taking bank customers or banking. There is space for everybody. The total business is really growing. Today, the banks have a huge gold loan portfolio. They have a portfolio of about 30 trillion, and the NBFCs have a portfolio of little less than 3 trillion. So there is a lot of business being done by the banks, and people may go to bank, maybe may come to NBFCs. It is not that, my point is, it is not that somebody is taking our business and we are taking somebody else's business. There is business for everybody. Now, about this number of customers.
See, Shreya, the number we are showing, it's actually the incremental number of new customers. So, every quarter if you are able to bring in 4 lakh plus new customers, that is a big thing. What you are thinking is probably the outstanding number of new customers. It's not. Every quarter we have added for around 4.2.
Ms. Shreya?
Yeah. Sorry, I lost that. So, understood. I get the part that it's addition of new customers, and every quarter it has been.
Sorry for interrupting you. The line for management has been dropped. Please stay connected while we reconnect the management. I repeat, the line for management has been disconnected. Please stay connected while we reconnect. Ladies and gentlemen, thank you for waiting patiently. The management is back online with us.
Yeah, so answering Shreya's question on number of customers,
are you there?
Yes, I'm there.
Every quarter we are adding a new set of customers, which is around 4.2 lakhs. Sometimes, there could be small variation. Sometimes it could be higher than previous quarter, but the important thing is that every quarter we are adding a similar number of new customers, and we are making fresh disbursement to those customers.
Got it. So that answers my question. Thank you and all the best.
Thank you very much. Next question is from Samir from Diamond Asia. Please go ahead.
Yeah, hi. Thanks for the opportunity. So just to kind of harp on this point of competition, while I agree that Muthoot has been there across cycle and probably one of the most long-standing players, just wanted to pick your brains on the fact that this time the new competition is AAA rated, especially from the NBFC side. Large NBFCs who are AAA rated want to scale this product. Also, more invested in technology. So how are we trying to kind of stay at the forefront in the product, as well as do you see any risk to, say, pricing or yields? Yeah, that's my question.
No, I think I had answered a similar question a little earlier also. There are people coming AAA or AA or whatever A rating, etc., with deep pockets, maybe coming into the business. But then we have been focused on this business. We are focused on gold loan. Our branches are also focused on gold loan. And we have seen similar people coming and probably after some time losing interest also. But whatever it is, people come to a sector when they see a lot of growth potential. So it definitely answers one question. There is growth potential in the gold loan sector. Now, whether somebody is coming and taking away our business, that question, I don't think it has happened. It is happening, and till now we have not seen anything like that. So we will see. We will wait and see what is happening in the market, and we can always make changes if necessary. But to me, if you ask me, I don't think we need to do anything, any knee-jerk reactions today.
Sure, sir. Thank you and all the best. Yeah.
Thank you. Next question is from Harshit from Premji Invest. Please go ahead.
Hi, sir. Am I audible?
Yeah.
Sir, I had a few questions. First, I'll put it all together itself. One is on the LTV piece itself. So this time, I think we have consciously, or probably because of the market factors, we have kept the LTV much lower than what it was running till last quarter. It's right now about around 57% versus 60-61% we had earlier. So wanted to get your thoughts that is it a conscious decision from our end, given the heated prices right now? And the second question was, sir, on the branches, that we saw a very good branch addition this quarter. If you can throw some light on the targets and what are the limits which we have unused at this point of time. And on the one last question is that when I look at the stage 3 reduction, last quarter it was 700 crore. This year it was around 100 crore. Despite that, our interest income recovery this time seemed very strong. So just wanted to double check that the 350 crore odd number which you said last quarter was regarding probably the 600 crore of stage 3 reduction. But this time that number was only 100 crore, yet the number was very strong. So if you can give some color on how should we look at the yields?
So about the branches, yes, we have been opening branches regularly. We again give request to RBI for permission to open branches. As and when the permission is received, we will keep on opening branches. We add about 100-200 branches every year, and probably this year also we will look at that number or a similar number of new branches this year also. Regarding the NPA, I think Women had clarified earlier in the first or second call that it is because of the churn in the old NPA accounts. So the old NPA accounts which were really old and had lot of embedded interest which was derecognized earlier, when it was got renewed or closed, those interest, a big chunk of that interest came. And the new NPAs which came did not have that much of accrued interest being recognized. So that is the reason for that.
Got it.
And on LTV, the 43% you see is the average LTV, and so our portfolio will have old loans, which is because of the increase in the gold price. Currently, if it look at it will be at a lower value. So it is merely because of average LTV. Otherwise, we are lending at 75% of the gold price, as per RBI norms.
Okay, but you are saying that probably the older customers who we have let at, where obviously the LTVs are lower, they have not come and taken extra money on the same gold, which is why
whenever they need, they will come and take an additional money if they need it.
If they need, they will come. If they don't need, they won't come.
And the reason I asked that, sir, if I look at from 1Q to 2Q, the drop was actually a bit sharp. So that 38 moving from 4 to 43 was actually a lot sharp. So probably, is it also linked to the stage 3 reduction?
Second quarter, there is an increase in gold price,
no? Gold price increase is all purely dependent on the gold price increase. When the gold price goes up, the LTV also comes down.
Typically, by when, sir, in your experience, does the customer comes and takes relatively higher amount or takes some of the gold back?
See, if you look at daily disbursement, we give maximum 75% LTV. The average will be still somewhere around 70-71%. Not all customers will go for 75. Now later, the same customers, when the gold price increases, their LTV will come down from 70 to say 65, 60, depending upon the increase in the gold price.
No, sir, I understood that, but I'm saying that behaviorally, what have you seen that customer typically in 3 to 4 months again, we should see either the LTV moderation, the customer taking more money or taking some of the gold back?
That depends on the need of the customer.
There is one thing which people should really understand. It is not that somebody has pledged their gold and he'll take all the maximum loan every time. He actually wants the gold back. So he will take only an amount which he feels he will be able to repay, if not 1 month, 2 months, 3 months. If he feels that he will not able to repay that loan, he will not take it on the gold, because if he really wanted the full money, he would actually sold the gold and got all the 100%, instead of coming to a financier and taking only 75%. So he is a person who needs temporary money, and he feels that after 1 month, 2 months, 3 months, etc., he will be able to take it back, and he will take loans only up to the amount which he feels he will be able to repay. Otherwise, he will lose the gold. So those are people. So somebody will not come just because the gold price has gone up. He will come if he really needs the money.
Sure. Perfect. Thank you, sir. All the best.
Thank you. Next question is from Rajiv Mehta from Yes Securities. You may go ahead.
Yeah, hi, good evening. Thank you for taking my question, and congratulations on very strong profitability. Sir, my question is, we are earning very strong ROA right now. So where do we plan to reinvest, for maintaining our customer base growth and our market share? So if not cutting the yields, then would it be in advertisement and marketing, or would it be in more employee incentives? Can you share some thoughts on your growth strategy going ahead to ensure that we keep on growing our customer base?
You want us to spend all the money?
I think, sir, for maintaining growth at the customer level of 10-12%, we would appreciate that if something has to be reinvested, it happens. Yeah.
So I think we have given a higher guidance this time. So we are expecting the business to grow maybe 30 to 35%. So we need all the cash with us.
No, but that is a value growth. So I'm talking about more, customer level growth of 8-10% being, maintained, despite, more number of players joining the industry.
So our major expenditures are on employees as well as on advertisement. So that's where we are going to spend amount.
Okay. Because I've seen in this quarter that your A&P spend has actually increased in this quarter. And your even employee cost has been growing well, which is a good thing. So these are clearly the two areas where you will keep on reinvesting for growth.
I think this is a bonus season, no? So Onam bonus, etc., payments come, incentives are paid. Of course, increments are also paid. So I think I'm not sure that may be one of the reasons. Of course, we are adding people also. The branch business is growing. We are adding some people also here and there. I don't know the exact numbers. In the general ballpark remark, I should be from.
So you can see the numbers, expense numbers break up in the presentation.
Yeah, no, I've already seen. And on Belstar, I mean, the losses have come down, and now even the book has stopped degrowing. So what is the outlook on growth and profitability in the next 3-4 quarters? How quickly can we come back to, that 15-20% growth, 3-4% ROA? What is the assessment basis, the current, loan stages, the current collection efficiency? How quickly can we come back to normalcy?
So I think probably next 2 quarters will also be quarters for consolidation. Probably we may not see big growth there, but then consolidation and maybe making the portfolio better quality would be the focus for the next 2 quarters. Probably after that, after 2 or 3 quarters, we should see business growing also. But again, it will always be on a calibrated scale only, not something which is, what should we say, very high-powered growth, etc. may not be there. So it will take 2 quarters for it to stabilize. Maybe this quarter the losses come down. Probably by next 2 quarters we should see a 0 loss, etc. And then probably we will slowly see business also going up.
Okay. Thank you and best of luck, sir. Yeah.
Thank you very much.
Okay.
Next question is from Shripal Doshi from Equirus. Please go ahead.
Hi, sir. Congrats on a good set of numbers. My question was pertaining to the ARC transaction. So what is the quantum left that can flow in the second half from that transaction of ARC transaction that we had done earlier?
Another 90 crores is left, so that should come. No, we are not very aggressive in terms of the recovery efforts.
No, it is. We are in the money. If you want to know that, we are definitely in the money, and the principal and interest definitely will come. We can expect something more than 90 crores also, maybe 30-40 crores more also from that.
Oh, okay. Got it. The second question was pertaining to the auction during the quarter, and what would be the loan book split in terms of below 2.5 to 5 lakh and above 5 lakh tickets?
The auctions is just very minimal.
10 crores or so.
10 crores, very minimal, minuscule. Because the gold price is there, so nobody would like to send it for auction. People,
right.
No, it was just 5 crores.
5 crores this time. Okay.
Acha, okay. And so the loan book split in terms of the ticket size, below 2.5 to 5 lakh and above 5 lakh?
So above 3 lakhs is 44%. 1 lakh to 3 lakh is 33%.
Okay. So the last question was pertaining to the, let's say, the NPA resolution that we saw during the quarter. So just wanted to understand, like at a blended level on this 3,000 crore of NPA pool that we have, what would be the overall interest outstanding? Is it fair to assume that it will be more than 30% sort of a number?
Yeah, probably there, yeah.
Okay, I mean, sir, if you could give some, let's say, closer specific number, that would be very helpful.
Yeah.
No, you can take approximately 30%, 1.5 years,
Right.
And if it is more than 1.5 years, it could be higher also.
Because, sir, as one of the earlier participants asked that, the reduction was this 100 crore, but the benefit on the interest income has been pretty lumpy at 350 crore. So, yeah.
So, I think we are repeating again on this. So, when there is a churn, you recover the earlier NP accounts, the new loans gets acted. So, the thing is that, because gold price have been high, some of these customers might renew the loan, or maybe, take out the NP accounts to sell the gold. The newer accounts, because there is a churn which is happening at a higher level, the interest dues will be lower. So, when you collect on the old loans, you get a higher income, but the new NPAs might be, the interest dues will be lower.
Right. Got it. And this last question I wanted to squeeze in.
Somewhere around 30-35%.
Right.
We don't have the exact numbers.
So just the last question was pertaining to the business strategy. So we have gold business being done under 3 companies now. What is the thought process going ahead? Will we continue with this structure, or there could be some change there?
No, we'll continue with this structure, yeah.
Got it, sir. All right. Thank you for answering my question, and good luck for the next one.
Thank you. Next question is from Mona from Dolat Capital. Please go ahead.
Yeah, hi, good evening, and congratulations on a good set of numbers. So firstly, on the, if I look at your stage 3 levels on the standalone book, which come down sharply over the last 2 to 3 quarters to about 2.25%. What will be the target, if any, for the end of year at your end on the NPA levels, given the kind of price we have and given that people are coming back to repay the, NPAs?
So actually, we support our customers who ask for more time. So when customer comes and says he wants 1 month more, 2 months more, 3 months more, or 4 months more to take back the loan, we look whether we are in the money, are we a loser. If we are in the money, we don't mind giving him more time for that. That is how these things remain as an NPA. As and when they get the money, they'll take it back. So no hard and fast rule that we should, but a very high NPA number in our books always cause some doubts on people. Although It is fully secured. We will not lose any money. But nevertheless, people will ask so many questions. Why is your NPA higher, etc. For a gold loan company, NPA is not an issue. It should not actually be an issue. We should not compare the NPA of a gold loan business to maybe the NPA of a personal loan or such other loans where NPAs result in loan loss. No NPA till now has ever resulted in a loan loss or interest loss for any gold loan company, including Muthoot. So when we hold something as an NPA, it is only to see that the customer doesn't lose his gold through auction. It's only to support the customer. Otherwise, we don't need to keep an NPA. We don't need to keep it. So we do it so that customers will not lose their gold because it's a precious ornament for them. That is the reason for the NPA. So finally, we don't have a target for NPA. We only see whether we can maybe the gold in the money we will retain it in the books.
But given the environment, is it fair to say that the NPA levels will continue to decline by 30-40 bits like we have seen in the last 2 quarters?
I think it's around 2%, 3% will remain in that level only.
Okay. Sure. And secondly, what would be our incremental cost of borrowing from banks as of today?
I think most of the banks, MCLR, 1-year MCLR is around 8.65 to 8.75, 8.8. So that will be the, because we are taking term loans, it's all linked with 1-year MCLR.
Okay. And what percentage of your book is linked to MCLR? The borrowings are linked to MCLR?
Yeah, all borrowings are linked to MCLR.
Okay.
All bank borrowings are linked to MCLR.
Noted. And just finally, so under Belstar, you recently opened 23 branches in H1. Is that the total gold loan branch count we have under Belstar?
Yeah, as of September, it is that one. We are still opening more branches.
Okay.
To open about 150 branches by this year.
Sure. So, at this point of time, the gold loan AUM under Belstar is not meaningful, is a fair assumption.
Yes, not meaningful. Correct.
Sure, noted. Thanks so much and all the best.
Thank you. Next question is from Bunty Chawla from Ask. Please go ahead.
Thank you, sir. Thank you for giving me the opportunity and congrats on a good set of numbers. Just one data point if you can share. Sorry if I am repetitive. Can you share the auction number for this quarter as well as Q1 FY26?
This quarter is 5 crores. Q1 also, Q1 I think around.
Q2 it is 5 crores.
Q1 is 13.
13 crores. 13 crores Q1, 5 crores Q2.
Okay. Thank you and congratulations.
Thank you very much. Ladies and gentlemen, in the interest of time, that was the last question for the day. I now hand the conference over to management for closing comments.
This is again George Alexander, Managing Director here. We had our head office team here. Many of the directors, including our Executive Director, Mr. K.R. Bijimon, and the CFO, Mr. Umman. All the other directors are also here. And we are happy about the results. And we are also pleased that we had a good set of deliberations. And I'm sure we would have answered many of your, clarified many of your questions, etc. From our side, we will try our best to perform as well in the coming months and coming years also, so that we deliver best results to all our stakeholders, whether it is the investors, the bankers, or our customers and our employees. So on that note of good performance what should I say? Good performance which we assure for the next years, I would like to hang up. Thank you.
On behalf of Elara Securities, that concludes this conference call. Thank you for joining us. You may now disconnect your lines.